Hello guys, in this video I'm going to be talking about another way of trade confirmation. This time it's going to be confirmation using aggressive orders. Again, we will be using the order flow, the bid and the ask setting, and we will be looking for aggressive market orders either on bid side, which would mean aggressive sellers, or on the ask side, which would mean aggressive buyers. So what this is all about. Let's start with scenario number 1, aggressive sellers in a resistance zone. So imagine there is a resistance zone somewhere in here, and in this zone you want to see a confirmation. You want to see a confirmation before you enter your short trade. So price is moving upwards, hits this resistance zone, and in that resistance zone you want to see aggressive sellers. You want to see aggressive sellers entering the market and pushing the price downwards. And aggressive sellers, if you look at footprint, this is one cell of a footprint, so those aggressive sellers will show on bid in here. So you want to see sellers jumping in. So if there is to be footprint like this, then those numbers on bid should be bigger than numbers on ask. You will see those sellers jumping in, those numbers growing bigger and bigger, and that's a sign of aggressive sellers. And this means that those aggressive sellers are rejecting higher prices, and most likely they'll push the price downwards. All right, so you want to see big numbers jumping in here. Well, not necessarily big numbers, but bigger than the numbers on ask. And usually this is pretty quick, so you also need to be quick in order to use this trade confirmation. All right, now the best way how to identify those aggressive sellers is if they show as imbalances in blue numbers. That's the best way how to identify those aggressive orders, using imbalances, but we will get to that. Let's now cover the second scenario, aggressive buyers in a support zone. So imagine a support zone, and imagine you found this support zone, for example, using volume profile or another trading strategy, and in that support zone you want a confirmation for a long trade. So price is going downwards, hits the support zone, and in that support zone you want to see footprints that have bigger numbers on the ask. That's buyers. Aggressive buyers are on the ask, so you want to see big numbers jumping in here. Well, not necessarily big numbers, but bigger numbers than numbers which were on bid. This means aggressive buyers joining in. This will also be pretty fast. Usually it is pretty fast. And what you can expect is price moving away from the support, making a reaction. So as soon as you identify those aggressive buyers, you enter your trade. Now, if you don't manage it, if the price just runs away without you being able to enter, you can always wait for a pullback to this aggressive zone. If there is aggressive zone with buying and balances, blue numbers, then those could work as a support, and from that pullback there could be a second buying reaction. Alright, so even if you don't catch it the first time, there still may be a chance that you'll be able to jump in and participate in that movement. Now this is how it looks like. In the first scenario, aggressive sellers. So imagine in this example the price was going upwards, And imagine that there was somewhere in here there was a resistance where you wanted to go short from. This is the resistance. Now, not much happening in here in this footprint, but the next footprint starts to form, and you see those imbalances, selling imbalances, those blue numbers. If you don't know what imbalance is, I was talking about it in some of the previous videos, so you want to check it out. Imbalance created on bid means aggressive sellers. Sellers way more aggressive than buyers. So those imbalances on bid start to jump in, sellers start to jump in, and this means that most likely there'll be selling activity. Alright, so that's the confirmation you want to see on your resistance zone. What you can also notice is the delta. I'll be talking about delta a little bit more, but in here you can see that it's positive and it's turned into negative. I'll talk about this more in the next slide, so let's just move to the next example, to the aggressive buyers. There was a selling activity in here, and then imagine that you had a support somewhere in this area. Imagine you created this support using a volume profile, for example, and in that support you are waiting for a confirmation. This is the confirmation of aggressive orders. This one, imbalances on the ask side of the footprint. Also this imbalance, and it doesn't need to be imbalance. You want to see big numbers jumping in the ask side. So also this bigger numbers than on the bid side. 59 bigger than 49. So you can clearly see that in this footprint buyers are stronger than sellers. Also delta tells you that. Delta in this footprint is 328 and in this footprint only 63. Alright, so from that you can predict that the price will turn and it will go upwards because aggressive buyers started to jump in the market. Now, let's talk a bit about delta. If I had to put it very simply in just one sentence, then delta is difference between buyers and sellers. Now, this is not entirely true, but if you remember this definition, you should be fine. And the delta is calculated using volumes traded on bid versus volumes traded on ask. So if you look, for example, at this footprint, then the sum of all those numbers minus sum of all those numbers is minus 41. This means that there are more aggressive sellers than aggressive buyers. You can see the delta below each footprint. If it's green, it's positive. If it's red, it's negative. You can also see delta in a summary in here, those numbers. As you can see, they match. All right, so this is where you can read delta. So for example, delta just for this one cell would be minus 13 because it would be 3 on bid minus 16. So delta would be minus 13, negative delta, but only for this cell, all right? But delta is always calculated for the whole footprint. So all those numbers, sum of those numbers minus sum of those numbers. In this case, there are more volumes traded on the ask, which is in here, which indicates more aggressive buyers and slightly positive delta. Now, there's one tricky thing with delta. If it wasn't, then delta would be the holy grail. It would be the absolutely best indicator on the whole world, and there would be nothing better. Unfortunately, it is not like that. Delta is not a holy grail. There is one problem with delta. Not many people know that, not many people mention that, but if you remember one of the first videos which I made and which I hope you watched in this video course, if somebody enters a trade with a limit order, if somebody enters a long trade with a limit order, it will show in here on bid. And if you enter a short trade using a limit order, it will show in here. So it's exactly the opposite as if you are using market orders. And this single thing messes the delta up. Alright, so that's the reason why delta isn't the holy grail. Because if people are using limit orders, then the information delta is giving you is very distorted. But it's not usually like that. People like to use market orders. People use market orders, especially aggressive traders. When they need to enter a position, then they need to enter with market orders. So delta helps. Delta is very useful to watch, but you also need to remember that it's not a holy grail, all right? Because of the limit orders. Now, I've just explained it very briefly, so if you didn't understand what I meant by that, I think best would be to rewatch one of the first videos where I talked about the footprint and how it's calculated more in detail. Alright, so anyways, this is how delta works. It's tightly connected with aggressive orders, and that's why I needed to mention it in this video. Alright, it's tightly connected with this confirmation strategy. Now, this is how the strategy works. The aggressive orders confirmation strategy. You wait for the price to reach strong support or resistance zone. So imagine there is a resistance zone somewhere in here. And in that zone, which you created, for example, using volume profile, you're looking for signal to sell. You're looking for aggressive sellers. So the confirmation could be aggressive orders start to appear. In here, those imbalances, those are aggressive selling orders. When they start to appear, it's time to go short. Usually what you'll also see is change in delta. So if you look at those delta numbers before the rejection of higher prices, they are positive. This means buyers were more aggressive than the sellers. It's usually like that when price goes upwards, delta is positive. But then those aggressive sellers started to jump in, and suddenly delta turned negative. And there was a sell-off. As you can see, delta is still negative. Alright, so aggressive orders start to appear. In this case, those are aggressive sellers. They are entering with market sell orders, delta changes, and this gives you nice confirmation that there's probably going to be a change in the trend. Now, the best confirmation you can get is if you see a big limit order or an absorption confirmation, and that is followed by aggressive orders. So if you remember, a limit order and absorption, those were also confirmations which I mentioned in the previous videos. That's the confirmation number 1. Absorption is confirmation number 2. So if you see any of those, and then aggressive orders start to appear, so in this case, this would be either limit order, the 174 contracts looks like selling limit order, and afterwards aggressive orders, aggressive selling orders start to appear. Those selling imbalances. Right, so this is the confirmation setup number 1. And those imbalances, those aggressive selling orders, is setup number 3. Combination of those two, or of course combination of number 2 setup and setup number 3. This is the best confirmation you can get, at least in my experience. Alright, this tells you that somebody big was waiting at your resistance. They entered with a limit order, or they absorbed the buying pressure. And then other market participants like you started to jump in because they saw the big player enter the market and they predicted that there will be a selling activity soon. So they start jumping in quick, those guys. That's why you also need to be quick, alright? They start to jump in, you also jump in, and you go short. Now, because you need to be fast, you also need to use fast time frame with this type of confirmation. I prefer to use 5-minute time frame, which means 5-minute footprints, or even faster. Alright, you need to be fast. Now there's also one more way how you can use the aggressive orders, and you can use them as sort of warning. So imagine you have a resistance somewhere in here and you want to go short from there. The price reaches this resistance zone and you want to see some confirmation there. But instead, you only see buying imbalances, aggressive buying orders. And this tells you that buyers are dominating the market. You can also tell if you look at delta. This is a really positive delta in here. So buyers aggressively start to jump in, they start to push the price upwards, and this is your resistance. In this case, it would be best not to enter your trade because of those aggressive buyers jumping in. You don't want to see that when price hits your resistance. Alright? There's high risk that those aggressive buyers will just push through and you'll take a stop loss. Alright, so those aggressive orders can also give you a nice warning not to enter a trade. So if there are aggressive orders going against your trading level, then don't trade that level if it doesn't get confirmed. And even if it does get confirmed, be careful. Alright, so that's another way how you can use the aggressive orders. Now, let's have a look at some examples to make it more clear. I've already shown you this example. Price going upwards. Imagine that there was a resistance zone somewhere in here. You want to go short from there. And you see aggressive sellers jumping in. Here, those imbalances. Also, those numbers, delta turns negative from positive. It was 296, then minus 285. That's a big change in delta. Alright, so aggressive sellers taking over, pushing the price downwards. Now in this example, imagine that there was support somewhere in this area and you wanted to see some kind of confirmation. Price was going towards your support, and in here you want to see the confirmation. The first thing to notice is this positive delta, even though the price goes downwards. This is pretty weird, and it indicates that even though the price goes downwards, buyers are entering their longs. Important thing to notice. Next important thing to notice, buyers start to jump in those imbalances and also positive delta. Way more positive than it was before, actually. So positive delta, and also this is the nice confluence of two confirmations. This is the absorption, the confirmation setup number 2. Sellers get absorbed in here. Aggressive buyers start to jump in. As soon as you see that, you go long. This was pretty nice and clear signal. You only need to know what to look for. Now in here, there was also this weird thing with the delta. Price was going downwards. Imagine that there was a support somewhere in here. For example, support which you found with a volume profile. The price hits this support zone and you look at the footprint, 5-minute footprint, and what you see is price going downwards in this footprint. But delta is positive, which is weird because the price is going downwards, but there are more aggressive buyers. So this is first thing you should notice. Then you should notice this 146, 108, 122. That's aggressive buyers jumping in. Aggressive buyers with market orders jumping in. This is signal for you to go long. As you can see, positive delta all the way. Alright, so let's have a look at another example. Euro futures, 5-minute chart. Price was going upwards. And first thing to notice, negative delta or delta close to zero, even though the price is going upwards. Let's say that there is a strong resistance somewhere in here, resistance which you want to trade if there is a confirmation. And what happens when price reaches this resistance is this. This is the confirmation number 1. Most likely big buying limit order in here, and then aggressive sellers start to jump in. Those sellers, those sellers, those sellers. So this is limit order, selling limit order, and those are aggressive selling orders. Then it continues in here. There's imbalance. Aggressive sellers start to jump in. Then also here those selling imbalances. But by the time you should already be in a short. Ideal place actually would be to enter just after this confirmation, the confirmation number 1. But then also you'll see those jump in real quick. So as soon as you identify them, you go short. All right? Nice combination of the first confirmation setup and this confirmation setup, the third confirmation setup. Now this is actually the same chart as the previous one, only a couple of minutes later. This was the rejection I showed you, and this high volume node in here is a resistance. It is not the strongest resistance, but the price could react to it. Price react to high volume nodes. So let's say that this area is a resistance somewhere around this high volume node, and you want to see some confirmation there. So price is going towards it. The first thing to notice is even though the price rises, delta is negative. Sellers entering, they are selling positions. There are more aggressive sellers than aggressive buyers. Nice imbalance in here confirms the aggressive sellers are there and they just started to jump in. Alright, so this setting imbalance combined with negative delta and of course this resistance zone, that's the signal you want to see to enter a short. Alright? As you see, as the price goes downwards, all those candles have negative delta. More aggressive sellers than aggressive buyers. Sellers dominate the markets in here. So in here, imagine that there was support somewhere in here. Price was going downwards, and in this support area, you wanted to see some confirmation. At the first confirmation, this high volume node. This is absorption, the confirmation setup number 2. Now after that, buyers start to jump in. aggressive buyers. There's buying imbalance. Also in here, when you see that, you enter long. Alright, so you have the absorption in here, and also those buyers start to jump in, aggressive buyers, so that's also the setup number 3, the aggressive order setup. Now in here you can notice how it looked like when the price reversed in this resistance area. The price went upwards, then this looks like a limit order, selling limit order. That's why it shows on the ask, because it's a limit order. Or I shouldn't say it is a limit order, but I think it was a limit order. Alright, so those 153 contracts, and after that 157 on bid. So this looks like a limit order to sell, and this was most likely a market order to sell. This one shows on ask, that's why I think it's limit order, and this one shows on bid, that's why I think it's market order. But I think that both tell you the same thing. Big guys are going short. Those guys were passive, they were waiting until the price reached their limit order. Those guys joined in as soon as they saw this. So sellers, aggressive sellers started to jump in. Those guys, aggressive sellers jumping in. Slightly negative delta. Then the delta is more negative. Those sellers in here, aggressive sellers. And there's a pullback, but still with massively negative delta, which means sellers are dominating the markets, and then the sell-off. Alright, so let's have a look at another example. In this example, I wanted to show you those aggressive buyers, those buying imbalances in here, also in here. If you have a resistance, and you see those guys going against you, the resistance could also be in here. It doesn't matter if you see this going against you, aggressive buyers jumping in with buying imbalances. You don't want to go short. No short. It's better to wait for the price to shoot past your resistance and then maybe enter a long from this area, because this is a support. Those buying imbalances create a support. Alright, so be really careful if you see aggressive buyers or aggressive sellers going against your position, against your support or resistance. It's always best to avoid trading such a trade. Now, as I was preparing this presentation, I saw this on the ES. Crazy load of aggressive sellers in here. All those are aggressive sellers selling imbalances. This is a sign of aggressive sellers, and when you see this, you definitely don't want to go long. It's a sign that the price will go downwards. So let me show you what happened afterwards, alright? How the market reacted to those selling imbalances, to those aggressive selling orders. I have that on the next slide. It's a little bit zoomed in. Those are the imbalances. There was a little pullback and then a sell-off with negative delta. Alright, those aggressive sellers push the price downwards real aggressively. By the way, currently there is a massive sell-off on the ES, and I bet those guys are making money on it. Anyways, let's have a look at another example. This is a short level which I had yesterday, or actually today, but early in the morning. So I wasn't trading it, but this is what the footprint looks like. aggressive buyers. There were aggressive buyers in here right before the price hit this resistance. A lot of buying imbalances telling me that buyers dominate the market, they are more aggressive than the sellers, and it's definitely not a good idea to enter a short, even though I had a resistance that I wanted to go short from there, but there were those buying imbalances, and even if I was awake and at the computer, I would not enter a short from there because of those imbalances. Now let me show you another picture. This is the same level. The price went above the level and then hit it again, but this time sellers took over, selling imbalances. So this would be a nice chance to jump in and participate in this selling activity. Now again, I wasn't awake at the time, it was early in the morning, but this would be the signal to enter the short. All right, those aggressive sellers showing up. Now let's have a look at another example. This is Australian dollar futures, also 5-minute chart. All those examples I'm showing you are actually on 5-minute chart. Price was going upwards. Delta was positive, as you can see in here, which is normal when the price goes upwards. Imagine that there was a resistance somewhere in this area and you wanted to see a confirmation. First thing to notice, absorption. Confirmation setup number 2. What happens next? In this footprint, aggressive sellers. And sellers start to jump in. There are 2 selling imbalances, 108 contracts in here, 38 contracts in here. Delta turns negative. This is the signal for you to go short. As you can see, this is where the sell-off started, this footprint. This is where the sellers really started to dominate the market, where the aggressive sellers started to jump in aggressively. Selling imbalance in here, a huge number in here, also imbalance in here, selling imbalance in here, another huge number on bid. So that's aggressive sellers dominating the market and pushing the price aggressively downwards. All right, this is how rejection of higher prices should look on the order flow. Absorption or a limit order, and then aggressive sellers start to jump in. Everybody wants to join the party, right? Now let's have a look at this example. This is also Australian dollar futures. Imagine that there is a resistance somewhere in this area, so you want to see that confirmed. Now there's not really any limit order confirmation or absorption confirmation, but there are aggressive sellers in here. Aggressive sellers start to jump in. There are 3 selling imbalances. Delta turns negative. This is the signal to go short. Now, if this happens just like that, not in a resistance zone, then it would mean nothing. It wouldn't be any sort of confirmation. It wouldn't be any sort of signal. You always want to look for it in a resistance or in a support zone. All right. I don't really recommend trading it as a standalone setup. Now, this is also a nice case of the 2 confirmations used together. Price is going upwards. Imagine that there is a resistance in this zone, somewhere in this area, and you want to see a confirmation. Now, this is what happened. Aggressive sellers pushing the price upwards. They are buying imbalances. But there's absorption. That's the confirmation setup number 2, all right, the absorption setup. And sellers start to absorb all the buying pressure. They won't let the price go any higher. Then sellers start to jump in here, 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 all those imbalances showing aggressive sellers jumping in. Delta turns negative, the trend breaks, and downwards we go. Alright, so we have absorption setup number 2, and aggressive sellers started to jump in here. That's the confirmation setup number 3. I really like combinations of confirmations, like in this case. So this is the last example. Euro futures, again 5-minute chart. Price is going upwards, buying imbalances, so you should be careful. But there is an absorption, and sellers start to join the party. This is what turned the price. First the absorption, then the aggressive sellers started to jump in. They wanted to participate the selling activity, which they think will follow. Alright, so this is the reaction. It started in here. Those guys help to move the price downwards. Aggressive sellers. It's always the aggressive sellers or aggressive buyers who move the markets, the prices. Alright, so that's for this video, guys. I hope you like it, I hope you found it useful, and I'll see you in the next one.